Shah Gilani joins us now. He's with Capital Wave. He's a strategist right there. The name of the company is Capital Wave Strategists. I got it. Did I get that right there, Shah Gilani? I think I did.
Yes, you did.
Yes,
Capital
sir.
Wave forecast.
Now, this home builder index of optimism, I think it's a 12-year high. That fits the narrative of optimism and confidence, and it fits your narrative that the economy is going to grow and the market will grow with it. This is very much in line with what you've been saying, Shah.
Yes, the optimism spreads around the country, it spreads around investors' appetite for risk, and it spreads globally also. So this indicator is just another one. You know, the housing market has been somewhat suppressed, so builders are looking at the opportunity to keep building and grow their inventories and sell a lot more. As long as interest rates stay fairly subdued, they should have a very good 17 and a good 18.
Well, I want to give you credit because right from the get-go, right after the election, you were the one who said this market is going to go straight up. You were also the one who said when it was at 19,000 that it would go to 21,000, and it did. So repeat that again for me. Where do you see the market going from now?
Well, we've really reached the levels I expected us to get to, and we've gotten there in very nice fashion, an orderly fashion, I might add. But right now, I'm a little bit nervous. I'm getting increasingly nervous on account of the fact that the expectations that players have had, the investors have had, institutional investors for sure, is that the markets would continue higher as long as we saw some movement on the tax cut front for corporates and for personal, and if we saw some stimulus movement. So right now, I think the administration's move towards trying to repeal and replace Obamacare is the wrong move. We should be focusing on tax cuts. If we don't get that, if there's a large pushback, and there already seems to be, that has already begun on the new ACA, if you will, then I think that's going to create a larger fight between the Democrats and Republicans, and that may impede the progress in any tax cutting. And I think the markets will look at that and saying, wait a second, this is not what we bargained for. So it's making me a little bit nervous in here.
I wonder if you're going to be right again. Straight up, you got that right. Now, a pause is what you're talking about. Actually, it looks like a pause at 20,800. But I've got to ask you about interest rates. 2 o'clock this afternoon, we'll find out if Janet Yellen is going to raise rates twice this time and twice more, or this time and 3 times more. Does it matter? I mean, supposing it's 4 rate increases this year, does that matter to the stock market?
I don't think it matters at this juncture. There are other things, as I said, tax cuts and stimulus are more important to the markets right now. If the Fed raises too aggressively, too quickly, that will matter. But right now, there's no reason for them to do so. There are only 2 surprises, I think, Stuart, that can come out of today's Fed meeting. Number one is if there isn't a rate hike, and the other is if there's any talk about the runoff on the Fed's balance sheet. They have a balance sheet. They hold $4.5 trillion worth of securities. If they plan on letting that run off, that means they're not going to be replacing those. That means that interest rates probably will start inching up a little higher, a little faster than we all expect. So I'm watching for anything to do with the words runoff of the Fed's balance sheet. That's something I think increasingly from now on investors are going to have to keep an eye on in terms of Fed speak.
All right, headline, all Varney viewers, Shah Gilani has just turned cautious after being a raging bull since November the 8th. That's accurate, right, Shah? You're not going to contest me on that, are you?
No. I'm optimistic but cautious at this juncture. I'd like to see some clearing on the pathway towards tax cuts, and that would make me increasingly optimistic again.
You sound like an economist on the one hand and on the other hand. Thanks, Shah Gilani. Always appreciated. Thank you, sir.